Good morning and welcome to Morning Markets with True Potential. Checking up on news and developments over the past 24 hours, we saw most equity market and risk markets posting uninspiring results yesterday. Equity markets started the day on the positive note but lost momentum as the trading session progressed. Starting in the day early strongly, as I alluded earlier, the positive momentum was carried up from strong Asian markets where both Japanese equities and also Chinese equities posted positive gains. But as it was also boosted by the weaker than expected PMI's Purchasing Manager Index readings, which came across Europe and much of Western world, which came weaker than expected. That also fueled the expectation that the markets are now expecting some softening tones coming out of central banks on their monetary easing, which have been the big headwind for equity markets and all financial assets in generally. However, as the day progressed, we saw a mood in the markets weakening with softer guidance after earnings coming from big major companies in the US. Q4 earnings season is well into its stride. We saw Microsoft reporting weaker Q4 earnings and also providing a weaker guidance for rest of the year. So I think that all those factors did play into some softening in sentiments overall. We also saw another bellwether reporting weaker earnings, 3M, which is a manufacturer of Scotch tapes and many other industrial products and domestic household products. They also issued earnings which were weaker than expected. Also, the guidance was a bit softer. They also hinted that they are seeing consumer-related demand weakening in the fourth quarter, and they expect that to continue to weaken as consumers control their expenses. Also, they highlighted some of the weakness was related to China. China slowdown and China lockdown. That perhaps is probably peaking, and given what we have seen, the opening of Chinese economy in general, that should be generally fade as the year progresses. But this morning, some positive news on the earnings front from ASML, the largest technology company in Europe, reporting strong earnings, and also they are able to increase their profit margins. So I think a good positive momentum been carried out this morning from earnings from ASML into European markets overall. We also saw some better data coming out of Europe yesterday. The composite PMIs were surprised on the upside. If you focus here in the UK, we saw the Purchasing Manager Index, the activity data, softened quite markedly to the composite PMI reading came at 47.8. The expectations were for somewhere between 49.1. In December, it was still in contractionary territory, but I think the biggest surprise were the softness in the services sector. Though we also see manufacturing sector also being weaker, but it weakened much less than what was expected in the market, and we are starting seeing some nascent bottoming out of in manufacturing sector overall. On the flip side, we saw some optimism on the year ahead outlook. Companies and businesses were much more positively optimistic about the outlook for the year ahead. Perhaps that's reflecting the build-up in economic momentum we are seeing in the last couple of weeks and couple of months. We have started seeing the momentum being turned in the global economy, and largely probably because of what is happening in China, the opening of China, the easing restrictions, COVID restrictions in China. That is all feeding into somewhat of positive momentum overall. We also saw cost pressures, leading to cost pressures have been easing overall. And this morning, in fact, we saw purchasing price index weaken quite markedly. We saw a decline, month-on-month decline of -1.1% in producers' purchases, the input cost that is. But also they were able to pass on those cost savings to the final demand. So the output prices were also fell by 0.8% in December. So all in all, the price pressures have continued to ease both on domestic households and also on businesses. We also saw the ONS, the data also shows that it was much more broad-based. It was not just one of the energy prices, but they have seen the reduction in costs in the parts and other inputs, equipments, and so on. So quite a broad-based decline, not just related to energy cost decline we have seen recently. Outside that, there's no major data we expect for the rest of the day, but we have one big company reporting, Tesla, expected to report after we close in the US. Investors and investors will be keenly watching those numbers because we have seen the Tesla recently slashing their prices for many of their models. So investors will keep an eye on those earnings, how they come across. But as always, we'll keep you posted on how it goes. And thank you very much for watching Morning Markets.
If you're interested in taking your investing to the next level, or would like to know more about the options available to you when you retire, then download our free guides to ISAs and pensions. These are available in the video description below.